everyone. This is the Caro's Table Talks on mental health and its connection to financial health. We're going to do a little bit of housekeeping here to get started, so please mute during the panel topics. The video is on, and we welcome you to use it, but by all means, please don't feel like you have to. Please ask questions in the live audience Q&A or submit via the chat. We'll do the live audience Q&A at the end of the session, but if I can squeeze in a chat question throughout, I will. If not, we'll address those at the end as well. And then it will be recorded today and available for distribution following our session. So we're hosting this. I'm Kelly Bain, co-founder of Caro's Digital Commerce Consulting Company. And we've started doing these Table Talk series to highlight some of our technical foundry members and their solutions and some areas in the industry that we think are really relevant to start speaking on, more prevalent to start speaking on. And so we have three areas of focus primarily. So cryptocurrency, ESG goods and services, including solar, and financial health and wellness, which we'll talk about today with the underbanked, underserved. But what we have found in doing so is Caros has become a data and technology matchmaker for good. And we look forward to sharing some of that with you as we introduce some of our partners today. So our panel as advertised has changed a bit, and that Brian Byroshrak was unable to attend. So our very own Caros co-founder, Connie Davis, has offered to fill in. We'll talk a little bit about the correlation between mental health and financial health and wellness. And I'd like to be clear here that financial wellness in our terms is not your ability to invest. It is regarding your ability to live well. So by way of introductions, I'd like to ask each of you to introduce yourself and give us your thoughts on this question. Is our industry building mental health or weakening it? So Johnny, I'll go to you first.
Loaded question. So my name is Johnny, and I'm the founder and CEO of CokeNotes, which is a digital mental health resource. And for everyone who is wondering why a 29-year-old with a face tattoo is running a mental health technology company, it's because I'm a suicide survivor and I was in treatment for 13 years. Been working in peer support and public advocacy since 2011. I went to school for psych, so I know this stuff like the back of my hand. I also know if there's one other thing that I know like the back of my hand, it is the acute sensation of financial anxiety and feeling behind, feeling afraid to spend money, feeling like I haven't saved enough or I haven't accomplished enough, or I shouldn't have bought that thing, or I should have bought that thing. I shouldn't have bought that stock. I shouldn't have signed up for that credit card. That sense of should and shouldn't, that sense of fear and lack and anxiety is not only true for families like mine that didn't really have a lot of money, it is true across the board. So I think that while that question is very loaded, I will word my answer like this. There is more that the industry can do to encourage healthier financial behaviors. And we'll talk more about how the way you spend your money and the way you think about money is tied to your mental and emotional health. But top level, I think there's lots more to be done, and I will present it as an opportunity rather than a problem because I'm on the outside looking in. Love it. Love that answer. Blair, I'd like to hear your thoughts too.
Absolutely. So thanks. I'm Blair Gatchell. I'm the VP of Growth at Bond AI, and we are all about financial wellness and financial inclusion. I'm not sure I could have said it better than Johnny just did. There certainly is a lot more that the industry can and honestly should be doing here to help grow financial wellness and financial inclusion. And it absolutely is a wonderful opportunity moving forward. I'll be maybe a little more provocative and less polite. I think the perception from the consumers out there is that as a whole, the financial services industry is not acting to promote and helping in terms of financial health and wellness.
Yeah, Blair, I would agree with you, and I'm excited to get into this topic. It's one thing that's passionate to Connie and myself in our work with Kairos. So, Connie, I'll point to you to give an introduction and weigh in on this very loaded question.
Yeah, thank you. Yeah, so hello, this is Connie Davis. I'm co-founder, as Kelly mentioned, with Kairos. We are intentionally trying to elevate the conversation, and sometimes that means, questions like these provoke, kind of a heavy feeling at first, but it always ends up with, what's the opportunity? Why do we have to come from a scarcity driven mindset? Why can't we look at everything as an elevated conversation and think about what's the art of possible, right? So that is what Kairos is here to do. So when we think about buzzwords that are on the slide, like personalization and financial services and financial inclusion and speed and friction, I am a huge advocate about words and being intentional with words. And I think that we have a lot of buzzwords in our industry that we don't always follow up with action. And so I'll kind of take a little bit of both of what Johnny and Blair talked about, is that I think there's always opportunity, but yes, I think that there are some unintentional consequences of the tolerances, the profiles, the conformity that's required to meet certain definitions of what is qualified versus not qualified. And when we try to talk about inclusion, we're actually creating exclusion as well. So that's what I would say in response to the question, Kelly.
Awesome. Well, I think that was a great warm up. So let's begin our discussion today. Connie, if you want to pull up Johnny's slide, the next one. So Johnny, CokeNotes is a daily mental health support via text messages. What drove you to build this technology, and what problem does it help solve for your users? Or for the sake of today's conversation, we're going to call them humans. I heard that on a call the other day, and I like that better than consumer or end user or whatever. So for humans, why did you build this?
So it will come as a surprise to 0 people watching this that I built this from lived experience. I created pretty much every entrepreneur has ever solved a real problem has done so because they encountered a problem and looked for a solution and couldn't find a great one. So I am one of those entrepreneurs. And really the problem that we set out to solve was the fact that most of the mental health industry says, this is kind of a humorous example of something very serious. What we do in the mental health field is if someone mentions that they are struggling, we say, all you have to do, I mean, it's kind of like saying, if you break your ankle, just ride your bike to the hospital. Like, we're asking people to do something that is challenging considering their specific situation. But the other part is, we're relying on people to speak up and say something in the first place. Like, when was the last time you felt anxious and depressed and said out loud, and this is something I try to do in my personal life, you say out loud, I feel depressed. I feel anxious. Like, that's such a huge ask. And I don't want to soapbox this because you can tell I get really passionate about it, but I have a good friend of mine who said the thing that makes mental health so tricky is it affects the part of you that would seek help in the first place. So she said if someone came up with that Staples easy button that would just fix her entire life and make everything beautiful, and they put that button on her nightstand, but she couldn't reach it because she was too depressed to get out of bed, she would never be helped. So CokeNotes took the completely opposite approach. We're like, how do we bring the easy button to the bed and bop it on someone's forehead? Like, how can we be proactive and do the reaching out for them so that they don't have to make a conscious decision every single day to focus on their mental health?
Yeah, I love that. Well, Kairos and our technical foundry obviously see the connection between mental health and financial health. And we appreciate that you brought a solution to the group to solve for this piece. But as someone who doesn't typically play in the banking and payment space, Johnny, I'm curious to hear where you see the connection between the two.
Well, I'll sum it up by saying this. I am friends with a lot of therapists and clinicians just because of my work. I am not a clinician. But I work with so many and hear so many stories and people venting about their conversations that they've had with clients, all anonymous, of course. And one thing that someone said to me that I think perfectly sums up the relationship between what I do and what y'all do better than I ever could was she said, Johnny, I bet that 80% of the problems that people come to me with could be solved if they had a healthier relationship with money. 80%. These are people who are going to see a professional clinician about a problem in their life. And she said, probably 80% of these issues could be solved, not disappear, could be solved if they had a healthier relationship with their finances. I'll never forget that. It's like it rattled around in my brain for years.
Yeah. Well, and we do see it. And, the saying money makes the world go around comes from somewhere, right? I mean, it influences most aspects of every person's life. So that's a great way to think of it. It's scary, but very, very understandable. So Blair, often financial institutions that I speak with mention their awareness and work towards financial health and wellness. So how can this be?
Well, and to Johnny's point earlier about opportunity and that statistic, and that's, that's impactful. That'll stick in my brain for a long time as well. That shows there's a huge opportunity out there. I think the technology is enabling a different approach to financial wellness and financial inclusion. And I might separate them out just a little bit. They both have direct and immediate impacts on anxiety and on mental health. I think in particular after 2020, there's a lot of people out there that are really struggling. I mean, I think there was before as well, but certainly the pandemic made things worse in terms of isolation, in terms of finances. Anybody that sees a news story knows that. But generally, when I talk about financial wellness with a financial institution, they're thinking in terms of budgeting or in literacy. And the reality is first off, if you're not an accountant, you probably don't enjoy budgeting. And but the reality is if you're in a financial crisis, you don't need a class. You need help and an advice. You need somebody to say, all right, today do this. Tomorrow do this. It's kind of a GPS-driven world out there these days. You don't have to know exactly how to get where you want to go. Just type in the address and your phone will tell you how to get there. And people that are really struggling, first off, that's the expectation for digital engagement in our economy as a whole. But people that are really struggling, let's meet them where they are and let's proactively help them get to where they want to be. That statistic there at the bottom is where I was coming from when I said that I don't think the industry is actually helping with financial health. 63% of surveyed consumers said that they're not getting help from their primary financial institution, or that their relationship is actively hurting. That's 2/3 of the consumers in the country. That's amazing to me. That's an opportunity for sure. From a business standpoint, that opportunity is being filled, right? That accounts for the growth of the neobanks that are out there, the digital only, organizations that are targeting specific affinity groups, right? They have that emotional connection, and they're benefiting in terms of business.
So I think Johnny needs to steal your GPS comment, because that works for his solution too, right? He's giving them the tools, just guiding them there. I love that. So there's a negative connotation with credit score and finance for a large part of the population. The stat here leads me to believe that financial inclusion is not a top priority when it absolutely should be. So Blair, how can we change this, and why is it important that we do?
Yeah, it's a fantastic topic. And for clarity, everyone I speak to is interested in financial inclusion. To me, a lack of interest in financial inclusion would be a statement of character and humanity. But the challenge is doing something about it, and clearly there's a big anxiety driver there, right? I mean, being the victim or the target of bias and discrimination has to be a huge driver of anxiety here. The challenge is, and you hit on it with bias and credit scores. In credit scoring today, you get a bonus if you have data in your file, even if not all of that data is positive. And you get a subtraction, a punishment if you don't, or if you have small amounts of data in your file. So if you're young, you're new to the industry, you've been on the fringes of the financial services industry, it's really, really difficult to kind of participate in that first level and that prime level of financial services. So what ends up happening, right? They go to a bank or a credit union, they apply for a car loan, let's say. They get turned down because either there's no data in their file or there's just a little bit and their credit score doesn't meet the requirements. Well, they still need transportation, right? So they go somewhere else. And instead of paying 4% for a loan, they pay 12 or 14%. Now we're starting that kind of negative, spiral here. They don't have, it erodes free cash flow, right? It means that there's less money available for saving, or even none available for saving. It means they have to buy by nice car, I mean reliable, mechanically reliable car. And that starts us down this negative, kind of financial health spiral. And what we have to do, we've got to stop that in the first place. And technology can do that. There's a lot of discussions out there about second chance banking. And really, and I get it, how do we solve that problem? But let's make it at least smaller by saying yes more often in the first place. And there's the opportunity with technology, and we can do that.
Well, yeah, you could see everybody's face on the panel as you were talking. Like, yeah, oh, wow, yeah, that's rough. But yeah, I think that's a good place to start. So Connie, kudos to you for these wonderful mind maps you create. I think they give a beautiful visualization, specifically with this one, of the wellness indicators we tend to use. So can I ask you to share the motivation behind this? Give us a little insight into your brain.
Yeah. So one of the things that, Kelly and I talk a lot about is we post with hashtag grasping the whole. And so I tend to reverse engineer everything. I start with a big picture, and then I go in and I, like Swiss cheese, you almost go in and you fill in what you learn as you go along a journey. And so this entire journey with Kairos has been about picking up nuggets, filling in gaps, understanding why things happen, meeting people like Johnny and Blair, for example, and you start kind of trying to slot things in to understand the big picture. And this is where mind maps for me help me to look at the big picture, and then help me to help articulate a story, justify why we're doing some of the work that we're doing, why some of the solutions like CokeNotes and Bond AI make sense, right? In a world that there's so much noise, there's so much chaos, and people's, their lives are busy and their lives are full. But when we need to stop and take a notice about what's inside of us that's driving us to do and to make the decisions that we make, or to create and make the choices that we make around money, or, I wanted to pause and look at the 4 domains of our life. And everybody has these. We have, from our love and relationships to the time, the spare time that we have, to our bodies and our health, mentally and physically, to our behaviors and choices, and to, the aspirational goals that we have. We're all striving for something. But what I think is really important is money has always been an amplifier, right? It's an amplify in what you intentionally do with it. And sometimes those are good choices, and sometimes those are struggles. And I think Johnny hit on it at the beginning, is that, when you're already in a place of stress or sadness, or being able to say, hey, I have this, feeling or this emotion, I'm feeling afraid. Well, that may, influence what I do with my investments. I'm feeling angry. I might go out and get a drink when I'm actually battling with sobriety. I'm bored. So that might be driving how much time I spend on Amazon, right? I might be spending my entire paycheck on Amazon because I'm bored. So understanding and acknowledging what those mental and body sensations are inside of us is what we're doing. Money is the way that we reach out and extend beyond ourselves into the world. So that would be why I created this mind map, because to me, it helps us look at the whole.
And wow, Johnny, there's so many indicators here that are specific to mental health. So tell us about how some of these indicators are ones that we could give more focus on in the financial realm through the positive tech support of CokeNotes.
One thing that I think people overlook a lot is like the physical outcomes of mental health and how expensive those can be. So like I have a good buddy who's a tech founder actually, who was hospitalized for stress. He had like a heart event, or cardiac event or whatever. I can't remember the exact term, but guys, he's my age and he was hospitalized, and they ran all these tests and we're trying to figure out, is there something wrong with your blood or was this genetics? And they were like, your body is experiencing so much stress. And I mean, tech founders really, it's like a whole different world of stress. And he has had to spend thousands upon thousands of dollars on all sorts of healthcare costs. And he already has insurance, and he's still having to spend tons of money on like tests and seeing specialists. And like whenever I hear people be like, well, yeah, mental health is like a nice to have, I'm like, well, wait until it starts impacting your physical health, because there are a few things more financially devastating than experiencing health issues. Like it completely drives me nuts how people will be like, oh, we have a wellness program. And I'll say, what is it? And they're like, well, we're asking our employees to count their steps, and then whoever does the most steps gets a water bottle. And I'm like, oh man, there's like so many more things that we could be doing here. And it's just it's a consideration that I would encourage. I mean, if you were to, and I'm going to speculate here because I'm not in the financial industry, but if I were to speculate from the outside, I would venture to guess that there is somewhat of a correlation between the mental and emotional stability of an individual and their spending patterns and their ability to pay back things like credit, like you said. If someone is really in a ton of distress, they might be in and out of treatment, they're struggling with a lot of things. How likely are they to pay back their credit card bill? Like it is actually in the financial institution's best interest to care about this, because at the end of the day, it is affecting their bottom line.
Wow, really great point. Yeah. You don't think about that. What somebody is personally going through, not just, I think a lot of times we think whether they have a job or not, right? Like that's how the ability to pay comes in. Well, there's more factors to it. So that's really a great point.
Yeah, and I would like to add just to what Johnny, as an example of what you're expressing there, is even just as a corporate executive, traveling with a heavy schedule, I still fell behind on paying my bills on time because I was on the road. I was dedicating everything towards the company and the customers and the travel schedule that I was adhering to. But until I put things on auto pay, meaning give me a tool to do something for me to take that stress off, I would be, just constantly falling behind on like, oh my gosh, it's not intentional, but there's only so many hours in a day. So I can attest to that as an employed, non-mentally, struggling, person with, I can't imagine what that's like for someone with a true mental illness that they're battling.
Well, and I think the stress of knowing that you don't have time to pay also affects you mentally. So
it does.
There is a correlation to that financial pressure and mental health, even if it is a temporary mental health situation versus a diagnosed mental health situation, it is still impactful. So Blair, same to you. So what indicators here can your chatbots at Bond AI positively support through?
Absolutely.
Through your children?
Yeah, and I want to comment on something Johnny said too. That's bigger than just financial services. Think about in terms, and this is just, I'll take the humanity out of this. Let's just put this in terms of business terms here. Think about productivity. Why should organizations focus on behavioral, mental health and behavioral health? Productivity. Stress takes people out of the office. Financial stress certainly takes people out of the office. Drives up healthcare costs, both personally and at the aggregate organizational level, and I think Johnny's story was a great example of that. But if we get, and kind of extending here, I think getting kind of back specifically to financial anxiety and financial wellness, the real connection between CokeNotes and what Bond AI does is behavioral science. And it's behavioral support. There's a journey in wellness. There's a journey that you need to go on for financial wellness too. Everybody knows how to lose weight, right? It's math. Everybody knows how to save money. It's math. But it's really, really difficult to do that. And what I really like, what's that?
That's so good. Everybody knows how to save money. It's like, it's not this complicated thing. It's like, just don't spend as much and don't buy stuff. It's like, why can't I do that?
And yet it's really, really, really hard. The simplest things are the hardest. And it's breaking the negative thought cycles that I think is really impactful. And then providing a positive feedback here. One of the things that we do, it's daily actions, just little steps, right? All right. And I get it. You don't have to have a solution to all your financial problems. But if you start moving ahead, even, you've got a plan, even if it's an imperfect one, and you start getting positive feedback, then, that's positive feedback. And tomorrow's better than today. And that's an optimistic thing. That's a hopeful thing. And I think that, reduces the anxiety there. But just today, do this. Tomorrow, do this. The next day, do this. And then let's celebrate that too. And let's have that kind of positive feedback. Hey, you improved your financial wellness by 6% last quarter, last 3 months, whatever it is. That's fantastic. Let's think about what we can do, moving forward.
Financial coaching. I love it there.
So Connie, can you speak a little bit about why the primary financial relationship is at risk if the financial health and wellness of the consumers or the humans is not addressed?
I think it comes down to choice. I think that there's so many tools out there. People, compare and I come from a digital commerce background, right? With digital experiences and, comparison of, that was a really cool experience in that mobile app. And as a tech geek, it's like, oh, that one's really cool too. Did you check that app out? And I think when we all first started out on our phones, it was always comparing one experience to the other, and you level up with each one. And so I think Johnny or Blair mentioned it as well. And it's become a way of life. It's set a standard. It's set the bar. And if you're, to that stat about a financial experience, if there's some other tool in the App Store that I go looking for because my current, financial provider or my current mobile app experience isn't meeting it for me, I'm going to go look for that loophole to help me manage what I'm trying to manage in my life. So I think with all of those different tools and thousands of apps in the app stores and people with resources and searching at their fingertips via their mobile device, they're going to find something better. And even if it means multiple apps, that's the choice that they're going to make. So I think, when we have the opportunity with the brand front and center to bring in that relationship, we need to treat them more than transactions. We need to build a relationship with them. And I think that this is an opportunity for, you think of the credit card concierge service and the benefits program, right? Who even knows what's in the benefits programs these days anymore? Is there anything meaningful in there? Do we need purchase protection? Do we need concierge with the phones in our hands? And we can go find, the best deal on tickets and airlines ourselves with a, quick Google search even. But what we need tools to manage modern day life and to optimize the devices and the technology that we have at our fingertips. So that would be how I would answer that, Kelly.
Awesome. Yeah. And before we get into a couple of slides that Blair wanted to share, Johnny, what happens to people when they're supported with positive tools instead of the negative scores or the derogatory actions? What's the result of that?
I'm not a parent, so again, I'm speaking outside of my realm of firsthand experience, but I did go to school for psych and learn about developmental psychology, and there is so much data to show that you can elicit much more positive behaviors from encouragement than you can from scolding someone for doing the wrong thing. If you champion someone for doing the right thing and encourage them, and it's all through school, like that's why they do things like gold stars, and you get a treasure from the treasure box when you're a kid. That developmental psychology stays true throughout your entire life. Like those little pats on the back encourage positive behavior more than a fear of a negative outcome would encourage positive behavior. Because think about, I don't know, imagine this. Imagine all day you think, I'm going to be the best employee I can be. I'm just using this as an example, work. Or, so option A is you're motivated to be the best. Option B is, I am afraid of being the worst. So all day you think about, I just don't want to be the worst employee. I just don't want to be the worst employee here. Who's going to perform better of those two? Like fear can only elicit so much action. Fear elicits a lot of thought. I will give it that. But I think motivation elicits a lot more action. The last thing I'll say on it is, this is a phrase I use all the time and everybody knows it, just like Blair mentioned, like this is common sense, but we breeze past it. Healthy people make healthy decisions. Everybody knows that, but we need to focus on the person first, instead of just trying to twist their arm into making healthier decisions and praying that they will wind up becoming a healthier person.
Yeah, that's a really valid point. So thanks for sharing that. So we're going to get into a few slides that Blair had shared with us. Johnny and Connie, please, insert some comments throughout and interject if you have anything to say. But Blair's going to take us on a little journey. So Blair, can you share with us what an AI-driven empathy engine is and how it becomes fiscal therapy, which I swear you guys should trademark that, fiscal therapy for humans?
And for credit, Jared Landrum is on this call. He came up with that, so I got to
give him credit. Jared. Kudos to you.
Yeah, right. And I wish I came up with that name, but I did not.
Blair, I think you froze on us. We'll see if we get him back. Now I'm on mute. Do you want to start down this journey a little bit, perhaps, until we get Blair back?
Who was that question for, Kelly? I'm sorry.
Yeah, it was for Blair because he froze. So I said, maybe you can start taking us down this journey a little bit until we get him back.
Yeah, these are stats that, I don't think that there's anything new on this stat. I think these are key performance metrics that every banker looks at in some form or another. I think that how they look at it is a little bit differently. And it goes back to the qualified versus not qualified. Do I cross-sell more? Do I not cross-sell more? Do they meet my definition of a healthy customer worthy of having, or do they not? And so what I think is really interesting is that if that's the lens sometimes of how they're looked at, but then if I switch hats and look at it a different way from the customer's view, and Blair, I'll turn this slide over to you. I think that, my financial health as a customer, as a consumer, is seen differently than the eyes of the banker who's critiquing me when I mess up. So I think it just further enforces some of the concepts we've been talking about. But Blair, if you're back, I'll turn it back over to you.
I hope I'm back, and I apologize for that. That is the fear that you lose the internet connection right
There goes your mental health for the day, right?
Right.
As you're about to speak.
That was not anxiety inducing at all.
No,
was,
not at all.
Calm and collected. The language that
We seem to be having technology.
yeah, and that can drive a lot of anxiety too. Did I lose y'all again?
You froze up a little bit, but I think we hear you, but your face is not moving.
Oh, okay. Well, let me see if I'm going to stop the video just for a second to see if that helps increase my my bandwidth here.
Yeah, we hear you loud and clear. So I'll just repeat it. We were talking about, AI-driven empathy engine and how it becomes fiscal therapy for humans. So
I think the stats on this slide here support why we need fiscal therapy, right? A survey of consumers, 89% of consumers, when asked about their financial health, said, or worse. That's massive. I mean, managing, 49% said they're managing. Managing isn't positive. Okay. Only 11% said they're thriving. And to Connie's point earlier about traveling and working too much, interestingly, 13% of the people that said they're thriving aren't making their loan payments on time. I mean, I thought that was fascinating. And then even half of the people that say they're managing, this is half of the half, say that they have an emergency savings. I mean, the state of financial health in America is not good. And this is an absolute opportunity for one to really do some help and do some good out in the world and actually help some people. It's also a fantastic business opportunity. And the power of the word "and." We can do good and grow a business. It's great taste and less filling. And that's where what we can do here. If we maybe flip to the next slide, I'll get into a little more detail of what I'm talking about. And Connie, I think it was you that said, it has to be the human that's in the center. And that absolutely is true. And honestly, I think that's where maybe the industry has lost their way a little bit. That we showed that statistic in the beginning that 2/3 of America don't think their relationship with their primary financial institution is helping their financial health. And clearly, most of America's financial health needs help. I think it's because the human, the person, isn't in the center. Technology is changing every industry. But when you read about how technology is changing financial services, you hear personalization, and that's great. And I think that's right. But the way personalization is used is, in this instance, Taylor. How do we get more effective at selling to Taylor? That's not what Taylor needs. Taylor needs help, and she wants help. That's the experience she wants, is help. And nobody wants to be sold. And there's so much emotion involved in money. You really don't want to be sold when you're dealing with your money, right? What they want is an action. And people talk about this. I want to be a trusted advisor. Well, if you want to be a trusted advisor, the human, the other person, has to be at the center. So here's the opportunity for technology. And I'm going to brag on us a little bit, but if we're going to manage Taylor's financial wellness and we're going to help her manage it, to the better, the first thing we have to do is measure Taylor's financial wellness. And we don't do this for a judgment. This isn't, credit scoring or, and we have to, and we did avoid the bias in traditional credit scoring. We do this as a measuring stick. So now we can figure out all the products and services that are available to Taylor and figure out which ones will best help her. And then present that to her with the context of how it's going to help her. This isn't selling to her. This is help with the context of how it's going to help. As it turns out, that's really good for business too. Not only is that positive for Taylor, but you think about offer acceptance rates. There's the power of "and" again here, right? So we're going to help Taylor and she's going to use more of our products. This is a win-win.
And I think, Claire, it's a blend of the brand that's helping her do that, right? And it comes back to the brands matter just as it matters where there's, which ones are economically friendly, climate friendly, with the causes that the person aligns themselves with. When a brand aligns themselves with the person, I also think that that's meaningful, meeting them where they are, to your earlier point.
And continue with the opportunity. You see a lot when you look at names and taglines, their service, people first, and all those things. Technology, I think that institutions really do want to help. Technology can enable them to actually do more and to better live that brand. And, we can, if we're measuring Taylor's financial wellness, we can celebrate when she increases that by 6% or 8% or whatever it is. But then we can also celebrate when a customer base as a whole improves their financial wellness by 12%. And that becomes, you're talking about helping people is good for the brand. Well, hey, we increased the financial wellness of our customer base by 12% last year. That means $1,214 back in their pocket. What can we do for you? That's good for business. It's kind of the power of and here. And then when we talk about financial inclusion, what we have to do is we have to get more people into the prime level of financial services. And this is good for everybody, right? It's good for everybody but the predatory lenders. And I'm okay with that. So let's say yes more often the first time. And I get the feeling I'm freezing again. All right. Let's say yes more often the first time. There's bias in credit reporting. We know this. Taylor goes to apply for a car loan. She's young. She gets turned out. She's going to end up paying more. We've kind of talked about that story. There's alternative data, transaction data. We can see if she can, she has the cash flow to repay that loan. Let's use that alternative data with the traditional credit scoring to safely say yes more often. Did y'all hear that? I'm afraid I froze again.
You are a little bit, but should we move to the next slide?
Yeah, let's keep going here. So what does AI fiscal therapy look like? And here's another connection, I think, into CokeNotes. Let's meet, the human where the human is. And technology can enable this too. So conversational AI. I'm not sure if phones are helping or hurting overall our mental health, but nevertheless, everybody's got one in their hand and they're using it. So let's communicate with in this instance, Taylor, where she wants to be communicated with. And hey, Taylor, I found a way for you to save $815. Are you interested? Yeah, you had me at 8. Tell me more. Pay off your high interest credit card debt with a debt consolidation loan, and you'll save $815 in interest expense. There's a couple of things we've done here. Not only are we saving Taylor money, which is fantastic, building loyalty and everything else, this is an asset to the institution too, right? This is a win-win. And then of course we want to make that immediately actionable so that Taylor can take.
Did we lose Blair again?
I think we lost Blair again.
Johnny, do you see a correlation here? Like Blair was talking about with the AI fiscal therapy piece of it and the connection with people?
I have a biased view of chat bots. All of the, like, CokeNotes is built on peer support, so it's like actual individual people writing the messages, like human beings, not machines. But I do understand that text is a fantastic way to communicate with people in the modern era, and definitely underutilized. And it's just ease of use, I think, is something that's overlooked a lot that SMS is wonderful at.
Yeah, and I echo that too. I think chat bots are always, they're again amplified by the intentions behind them and how they're programmed. And I think that what this represents is a map, if you will, that helps the person through what they may not know. So it's combining a bit of financial literacy and a plan with positive encouragement, because I mean, those could be very, differently coded. Again, back to the intentions behind the chatbot and how it's coded. That human-centric design is about how do we drive communication in a way that encourages and uplifts in moments that are needed, especially in times when someone's over budget, they're paying too much. Let's not perpetuate the shame and blame game. Let's encourage and educate and uplift them. They're probably already very well aware of their debt status or what, things that they're carrying as far as loads and stressors on their mind. And there's a difference between, I think, pushing on that button versus helping them to work through it instead of, carrying that alone by themselves with more shame and blame on top of that. So I do like the experience that, tools like this, but again, it's a map. It's giving them a map. It's an interruption pattern. And I think it's personalized.
And I'm back. And again, I apologize for that.
Okay.
Yeah. It's Murphy's Law of meetings, I think, right? When I had a good point to make, I drop off. And Connie, kind of continuing with what you were just talking about there, and this idea of AI financial coaching, let's help people, through their journey here. Creating a budget is a really important and good thing to do in terms of finances. Now let's help people live it, right? Hey, you're over your retail therapy, budget, and everybody needs to have a little cheat out there, right? Just a little guilty pleasure. That's an important thing too. You want me to help you, find ways for you to stay on budget? Yes, please. Well, reduce your caffeine habits of spending, and that'll get you back on track. Oh, okay, coffee at home. I love that. Or let's help people. It's not uncommon for an institution to have rewards programs, for example. Well, it's not good enough to have that. You've got to help customers maximize the benefit from it. And that helps the institution too, right? Hey, and this is an example I'm using, Taylor, instead of, buying your coffee at the national chain, shop local at this local coffee shop, you would have saved $9 in cash back last month rather. Doesn't sound like much, but hey, if you save me $9 every day, you'll be my friend for life. That's impactful. People, and it's positive, and it gets, people moving in the right direction. And, it can start the savings, right? At some point, there has to be that first dollar that goes into that savings account or that investment account. It's got to start somewhere, and this is where it can start.
Just like working out, right? Go to the gym, get your 10 minutes in, and then you work up your tolerance, and it becomes a pattern and a habit.
I think there's, dieting, exercise, wellness, financial wellness, it all ties together. Absolutely.
Awesome. Well, thank you, Blair. So we don't have any questions so far. So if anybody wants to use the chat right now, we'll go ahead and take some questions. And while we wait for that, perhaps everybody would like to kind of give a little closing statement and wrap this up from their perspective. So Johnny, why don't we go to you?
Really, I feel like I haven't said a whole ton, and I haven't really needed to, because the people who are attending this already have an inkling of what's going on. But basically, if you think that your brain and your wallet are not connected, you're probably not watching this. So if you are watching this, thank you a ton for recognizing that there is a direct correlation. And also, I can't speak for any other panelists, but I'm going to assume that they're in a similar boat. We don't do this to hear ourselves talk, and we don't do this to practice. We do this because we're passionate about it and we care about it. And we pray that after something like this, we get flooded with a ton of emails saying, I totally understand what you're talking about. I want to take action. You can pat us on the back for having the conversation all you want. You can share it on your LinkedIn, feel real good about it. But as someone with lived experience in the mental health world for almost my entire life, action is all that matters. So for the love of all that is holy, reach out to at least one person on this panel and take one type of action today. It's Friday. take it anyway. Take that action today, because heaven knows if you wait until Monday, what it will be buried under. Just don't allow this to be like a throwaway lunch webinar so you could burn an hour when you're really just kind of senioritising your way through a Friday. Like, be intentional, reach out to at least one of us and take some sort of action that will improve financial wellness and or mental wellness, most likely both.
Awesome. Thanks, Johnny. Blair, you want to give a little closing wrap up?
I don't think I can say things better than Johnny. That was fantastic. I love feedback. Even skepticism. I love that. I love it when people will ask me in a skeptical question or call me out on something they disagree with. That conversation, we both end up enriched from that conversation. And I love hearing other people's perspectives, and hopefully I've maybe challenged a little thinking out there too. But yeah, please do, reach out, take action. That's brilliant. And let's do some good. Let's do some good for people and do some good for our organizations, because we can do both. Great taste and less filling.
I love it. Connie?
I just want to say, just to thank Blair and Johnny for the time today. I think this is a conversation that is absolutely worth having. I think that, there's voices that need to be heard, stories that need to be told that's happening, behind a mobile app, where people feel like they can't, express what they're feeling, the frustration, the friction, the anxiety, all these heavy, hard-hitting words that tend to be hidden behind a screen, or conformed to some definition of me as a consumer that I'm supposed to be, when really we should just be authentically embracing people and meeting them where they are. So this is absolutely convinced me that this will be the first of many conversations in this series. I invite you both back to have a deeper conversation with us. And I think, this takes an effort to step forward and to challenge status quo. To have courage to really be open to that skepticism, Blair, as you talk about. But I think that for the good of the whole, for the people that struggle with this mental, health challenge, just as they do with other life goals that they may have, it's an important one.
Thank you, Connie. So yeah, just to really wrap this up, it looks like we don't have any questions. So we always be available to the Kairos moment when immediate action is required. And to Johnny's point, make it immediate. Make this your, front of mind, top of thought. Let's execute on some of the things that we heard today. If you have, some insight, please share it with us. If you have questions, please reach out to us. We're always available. But yeah, we've been doing these table talks about every week, every other week. We intend to continue to do them. So feel free to share topics that you want to hear as well. We would be happy to tailor some of the sessions to what you're hearing out in the space. But I go back to my comment earlier that when we talk about financial health and wellness, we're not talking about your ability to invest. We're talking about your ability to live well. And that is important for all humans. And we hope that we have helped some of you figure out ways to do that with your business today. So with that, we will wrap it. And thank you all for spending your time with us. And we'll chat soon. Thank you to my panelists as well. Thanks, guys.